Hey everyone, welcome back to Steve's View. Today we're diving into a hot topic that's been making waves in political and financial circles. Should Jerome Powell, the Fed chair, be fired? And how do Donald Trump's tariffs fit into the picture? This is a story about money, politics, and power, and it's got plenty of sharp opinions flying around. But as always, I'm here to break it down for you, keep it real, and show you both sides of the debate. So grab your coffee and let's get started. Let's start with the big question. Should Jerome Powell be fired as chair of the Federal Reserve? There's a growing chorus from some corners, especially among Trump supporters and certain conservative commentators, that Powell's time is up. Why? Because they argue Powell's interest rate policies have been a disaster. They say he's been too cautious with cutting rates, too slow to fight inflation, and that his decisions have dragged down the economy. Some go further, pointing out Powell isn't even an economist by training. He's a lawyer and a former investment banker. They see that as a sign he's out of his depth. One outspoken critic even called Powell a mediocre bureaucrat whose mistakes have hurt ordinary Americans. And from that perspective, firing him would be a smart move, especially if it means replacing him with someone more aligned with Trump's vision of economic growth and lower interest rates. But here's the other side. Jerome Powell is actually widely respected in the world of central banking. He was appointed by President Trump in 2018, after all, and has remained in his position through different administrations because the Fed is supposed to be independent from politics. The Fed's job is a tough balancing act, keeping inflation in check while supporting job growth. And raising or lowering interest rates affects everything from mortgages to business loans. Many economists argue Powell has done the best he could given incredibly tough circumstances, like the pandemic fallout, supply chain disruptions, and a global economy that's still recovering. Plus, firing a Fed chair mid-term for political reasons is risky. It could shake investor confidence, spook markets, and undermine the Fed's independence, which has been key to the U.S. economic stability for decades. So, should Powell be fired? Supporters of firing say yes. He's bungled inflation control and slowed economic recovery. Opponents say no. He's navigating a storm, and stability matters more than politics. One major point of criticism is Powell's early stance on inflation during the Biden administration. Remember, back in 2021, Powell and the Fed said inflation was transitory, meaning it was a temporary spike due to supply chain issues and pandemic disruptions. That turned out to be wrong. Inflation stuck around far longer and hit levels not seen in decades. Critics say Powell was too slow to react, and that this misjudgment cost Americans with rising prices on everything from gas to groceries. But it wasn't just Powell. Most central banks around the world made a similar mistake. Europe, Canada, the UK, they all thought inflation would cool quickly, but had to adjust course as prices kept climbing. Powell himself acknowledged the error and has since shifted to more aggressive rate hikes to tackle inflation head-on. So the question isn't just did Powell misjudge, but how much blame should he bear for a global economic trend? Some argue Powell shouldn't be Fed chair because he's not an economist. He's a lawyer and former investment banker. Is that a fair criticism? Well, it depends. Sure, many Fed chairs have strong economics backgrounds. Janet Yellen and Ben Bernanke, for example, were academics before becoming chair. But running the Fed is also about leadership, judgment, and understanding financial markets, not just economic theory. Powell has decades of experience in financial regulation and policy. Many would say his practical experience is just as valuable, if not more so, than a PhD in economics. And remember, the Fed's decisions aren't made by Powell alone. The Federal Open Market Committee, FOMC, includes a range of economists and financial experts who collectively decide policy. So while Powell's background might not be traditional, it's not clear that it's a disadvantage. Now let's switch gears to Donald Trump's tariffs. His trade policy shook things up by slapping tariffs on goods from China, Europe, Mexico, and others. Why did he do this? One big reason: Trump wanted to protect American manufacturers and bring jobs back home. He also saw tariffs as a way to pressure trade partners into better deals and to raise government revenue. Did it work? Well, it depends on who you ask. Tariffs did bring in billions in revenue to the U.S. Treasury, and some manufacturing sectors saw a boost as imports became more expensive. But on the flip side, tariffs raised costs for American consumers and businesses that rely on imported parts. Some industries, like agriculture, suffered because other countries retaliated with their own tariffs on U.S. goods. Most economists agree that while tariffs can protect certain jobs in the short term, they can also slow economic growth and increase prices overall. So Trump's tariffs were a strategic gamble with wins and losses. They weren't a silver bullet, but they sent a message that the U.S. wanted to renegotiate decades-old trade agreements on more favorable terms. One last thing to highlight is the political aspect. The Federal Reserve's independence from the White House and Congress is a cornerstone of American economic policy. It means the Fed can make tough calls, like raising interest rates, without worrying about short-term political consequences. When presidents try to pressure the Fed to keep rates low to boost the economy before elections, it risks creating bubbles, inflation, and long-term damage. That's why many experts warn against firing Powell just because you don't like his policy decisions. The Fed's credibility and independence have helped keep the U.S. economy stable through many crises, and that's something worth protecting. So what should you take away from all this? Jerome Powell has faced tough challenges and some missteps, but he's navigating complex economic waters. His background may be unconventional, but experience and judgment matter just as much as degrees. Trump's tariffs were a bold move with mixed results. They shook up trade but came with costs. And most importantly, messing with the Fed's independence can have serious consequences for financial stability. That's the story behind the headlines. If you want to see the economy thrive, it's not as simple as firing one guy or slapping on tariffs. It takes careful policy, balance, and yes, a little patience. If you enjoyed this breakdown, hit that like button and subscribe for more deep dives into politics and economics. And let me know in the comments, do you think Powell should stay or go? Are tariffs good or bad for America? I want to hear your thoughts. Thanks for watching, and I'll see you in the next video.